Hey, this is Uncle Dan. I'm reviewing a top 5 list of the biggest winners of a portfolio from a famous trader on Reddit. I've reached out to him and he's agreed to share with me some of his trading data. And what I'd like to do is to go back and try to validate the trades. Were they really done? And then look at the variables around the trades to see if there's anything we can learn from this. Now, he has a set of rules that he says he uses. And I'm going to look at these trades to see whether he applied his formal rules in those trades and whether that all syncs up. And then we can see whether we can potentially use some of his rules in our own trading if in fact we can validate that his trades are real. You know, as I always tell you, no matter how long you've been in the markets, you should always think of yourself as a student of the markets. You should always be trying to evolve your strategies. You can't have one set of rules forever. The markets constantly change and you have to evolve with the markets. So this is an interesting exercise for me. I'm doing it. I figured I'd go ahead and record it. You guys leave comments down below if you find this interesting as well. I'm just going to do the top stock today, and then I'll see if you guys are interested in me documenting this and sharing it with you. If I'm the only one who's curious about this, then I'll just keep doing it for myself. But if you guys can benefit from it, I'm happy to record this, edit it, and then post it for you guys to share, and then we can use this as a means to kind of discuss different option strategies. Hey, welcome back. It's day 2. We're analyzing the top 5 trades of our millionaire man, Mr. Mori, who has turned 35K into 1.3 million in just 3 months. Yesterday, we reviewed his Amazon trade. As we look at the portfolio here of his top 4, we're going to look at number 2. So I'm circling it here so you can clearly see which one I'm talking about. And this is NKLAW. And this is a trade he did on May 12th and 13th, and then took profit on June 8th. Now, at the time he put this trade on, it was actually VTIQ. And then on June 8th, it was NKLAW. So we're using 2 different symbols when we look at this stock. So in order to see the graph, we have to use NKLAW. But in order to see the prices of the options, we have to use VTIQ. But anyway, let's go back in time. Let's go back to May 12th. And let's look at what happened during the day. We'll look at the quotes and we'll look at the charts. And we're going to relive this event. And through forensic science, we're going to confirm whether this trade is real or not. So let's get started. Hey, welcome back. It's May 12th. And today on May 12th, we have streaming prices on the Thinkorswim platform by using the on-demand function. So guess what? It's 7 minutes left to the close on May 12th. Prices are streaming in. On the left is my portfolio of different SPACs, and the top performer on the day is VTIQ. The name had not yet changed. So these are the top performing SPACs on that day, and here are the options. Now, our friend Mori had decided to buy a bunch of the 30 calls on July 17th. So he wasn't looking at the 3-day or the 38 days. He was going out 66 days. Look at the implied volatilities, 150%. These are not cheap options. I don't know what he was thinking when he jumped into these. But let's go and take a look at the chart. First of all, let's take a look at the spread on the day. It's low of 265, a high of 590, and he was paying right around 530 for 80 contracts. Okay, so we're looking for 80 contracts that traded at 530. So we're going to go look at the chart and get a sense of whether we think we can see a price being traded at 530. Now, when you look at this daily chart, because it's May 12th, you don't see yet where the market's going. So this is what he was seeing at the time. He saw a stock that broke out from 10 up to 16, came all the way back down to 10, and then was breaking out to all-time new highs. So he actually stepped into this 150% implied volatility. Now, the call that he picked had only been trading for 2 days, traded a low of 171 the day before and a high of 350. And so at this point in the day, he was looking at a high of 590, and he had already bought in 80 contracts at 530. So let's zoom into this chart of the option and let's go to a 1 minute. And what we're going to try to do is to see if we can find the price of 530, and then we're going to look to see if we can find 80 contracts. It's probably going to be one of the biggest trades of the day. Let's see, there are 124 contracts traded here, and that was a high and low of 5. Okay, so that's not him. Here's another one that's a quantity of 100 contracts, and that 100 contracts right here, that was 530. High, low, close of 530. Let's take a look here and see what this one was. This one was also 530, but 81 contracts. 81 contracts. Open at 530, high of 530, low of 530. So he could have been either one of these. Both of these contracts, so he could have been either one of those. But we can definitely see where 530 had traded over 80 contracts. So I think we can go ahead and validate that trade did happen. And what's interesting is, he did not buy it at the low of the day or the low yesterday. He was buying near the high of the day. So now we're going to jump ahead. There's 4 minutes to the close, but now we're going to do is jump ahead 1 day, because guess what he did the next day? The next day he bought another batch of calls. The next day he bought 25 contracts at 750, and then he bought another 20 at 910. So 80 contracts wasn't enough for him. He wanted to get 125 contracts. So now let's go back and look at the chart. Okay, so here's the next day. So we'll zoom in on the daily a little bit, and let's go back to the daily on this one. So what we see is the stock went up and hit 35. So look over here. The stock hit a high of 35, but was trading back down at 30. So what we see here is that this stock was up another 13%. For some reason, he's looking at this breakout and has decided he wants to have a big position on it here. And this is what's happening to the option. So it went from 5 to 11 in a day. So that's pretty impressive. Pretty impressive move. Now let's go back to our forensic science to find the 2 trades that he did. Now these are going to be harder because the volume's not as high. But he did 25 contracts at 750. So let's take a look in here. What kind of volume we're seeing? Well, we're seeing a lot of volume in here. So it's going to be hard because his volume is not that big because he split it into a couple pieces over 2 days. Basically, all we can do is look at a few spots where it traded 750, or when it traded 750, which would be right up here in the middle. So it's either something that happened here, or it's happened later in the day. We have to take a look closer at that to see which one it was. But let's see if we can find anything at 750 that stands out. These are all small. We're looking for 25 contracts at 750. So here's 58 contracts. And over here, 95 contracts. So it could be any one of those. Over here, couldn't be that one. Over here was 63 contracts at 750. In the afternoon, there was one here, which was 32 contracts, and he only did 25, so that's another possibility. So I'd have to say that based upon what we can see here, and then he did 20 contracts at 910. So where would he have gotten it at 910? So here's 33 contracts. Okay, so this opened at 910, and there's 33 contracts. So this is probably him here. There's another one that had a wide range, but only 4 contracts. So this is probably him here. 33 contracts, of which 25 were his, and actually traded a low of 9, but he got filled at 910. So I think we can say fairly confidently, possibility is very high that he was able to do that trade. We can definitely find volume at the price that he traded at on this day. So let's zoom back out again. So that's what's happened over the last couple days. He bought it at 530 on this day, which would have been either here or here, probably closer to the close. It gapped up, and he wasn't happy with 80 contracts. He picked up another 45 contracts. So he net 125 contracts. Okay, so let's go back to the daily. What I want to do here is, so his exposure, okay, when he bought those, 125 contracts, an average price of $635. So his cost basis was $79,415. So if this stock were to drop, he's looking at risking $79,000. So here's where the stock is, and here is where the option is. Now what I thought we would do, he does not close this position until June 8th. So I think what I'd like to do is to hop ahead 1 week at a time, and let's just see what happened. So on that day, it came back down. He added to his position, and the stock dropped, and the calls dropped all the way down to 250. Wow. Okay. And so he did not cut loss. He really had no opportunity to take a profit after the day he bought. Okay. So that doesn't look good after 1 week, but he's hanging on. We're going to jump a week ahead to May 27th, and we're starting to see a rebound for the next week. We're back up to 30, but still was not as high as where he was. And the applied volatility has come out a little bit. I wondered, let's go and look at the traded price. And this is for the 30 call in July. Let's look at what the implied volatility is doing. It's still hanging up there. It's still 161%. It's actually gone up a little bit. So this is pretty expensive options in here. But he obviously took a huge drawdown in here. And you notice that when he added to his position, he added to it when it was going up, not when it was going down. Normally it would be done the other way. But hey, he's the one that's making the million. Now we jump ahead to June 3rd. And it will be June 8th where he decides to take profit. So June 3rd, what's happened is the stock has gone up and on June 2nd and made a new high at 38. And when the stock made a new high at 38, the call option only got up to 10. Now that's because of time decay. If we look across here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 trading days, so almost 3 weeks have passed. Time decay is affecting his call options. And so although he's making a new high in the stock of 38 from 35, $3 higher, instead of being at 14.50, he's actually hitting 10 at the high. So you can see how time decay affects your long option positions fairly significantly over a few weeks. So he's back to break even on his position. In fact, he had a nice profit when it hit 10. Still no interest in taking it. Now let's, just for the fun of it, let's go to June 5th, which is the Friday. So one day before he gets out. Let's just take a quick look. Anything else happening in here? Well, on June 4th, on the Thursday, we go up and make another new high in the stock. They've now converted it from VTIQ to NKLA, and it's still in the top performance list. Here we are, it's Friday. We made another new high. The options are still kind of hanging in there. He's right around break even, not seeing a significant profit. So now we're going to move into Monday. So the weekend's passed. We come into Monday and oh my God, are you kidding me? What in the world happened there? So on June 8th, this thing went crazy. The stock hit 74 bucks. Now what happens to the option on that day? We have to change the option identifier now. It's now been converted to NKLA. So remember how this looks here. We made a high of 10 on the previous Thursday. The stock has just doubled. Okay, and look at this. NKLA on the day is up 103%. So what happened on the Monday? This was the conversion of the name from VTIQ to NKLA. And the stock is up 103%, and the warrant is only up 54%. You see how the warrants lag behind when the stocks get really crazy? And that might be because Robinhood investors weren't allowed to buy warrants. Although I don't know if they could buy warrants back then or not. So now look, the options are zero priced. So now let's change this to NKLA. Give it a second to update. Stock's up 100%. And voila. Now Our 30 call is trading at 42, a low of 11, a high of 42. It's up 400%. So now let me copy that back into our chart. Okay, yeah, maybe it is because it was $10 on Thursday and came back down. So this is right. Okay, so what we're seeing is they've provided 2 days of historical data after they changed the name. So you can see the last 2 days. Now what we can do here is we're going to take a look now. Let's zoom in on a 30-minute, help us get a better idea of how this thing was trading. Okay, so Thursday and Friday, it was just drifting down to his break even. And then here it is. By noon, this was trading at 25, and it went on and hit 42 on the high. And our streaming prices are just after the close. So this is the full day of trading. And so on this day, he sold all of it at $24. So we're looking for 120 shares, 120 contracts. So right here is 25. There's 24. We're looking for 125. I don't see it. 162 contracts between a low of 22 and a high of 28. 162 contracts. Here, there's 84 contracts that traded. So the biggest trade of the day is this one right here. It's 162 contracts, and he traded 125. So I'm going to say we got a confirmation that we found his trade on the day. It was right at 11 a.m. and he got it all filled at 24. And within a few hours, it was at 42. So at 24, his average cost was 6. So he made 400% return over those 3 weeks, from May 12th and 13th to June 8th. So he hung in there, and then when he was up 400%, he took profits. He didn't wait for 500% or 1,000%. Now that's quite interesting, right? That's big money. So he collected at $24 on 125 contracts. He collected $300,000, and he invested and risked $80,000. So that's pretty impressive. Now, let's go back and look at the two charts. So here's where the stock's here. Here's where the stock is at 73, closing on its high of the day, and the option closing at 42. Interesting because he likes to trade breakouts to the upside, all-time new highs. So I got to look. Don't you want to know what happened on the next day? We got to look, right? Oh my God. Are you kidding me? The stock on the next day on the closing hit $94 and closed. And let's see, with the options, with the SPAC warrants, we're all up again, and NKLA was up $6.46, up another 9% to 79. Huh. Where did the option go? It went from 42 to 58. It closed at 53. Did 5,000 contracts the following day. So again, at 55, he sold at 24. Could have made another $350,000 if he just waited one more day. So he's made some impressive returns. Now we go one more day, and it comes tumbling down to 65, and then this comes back down to 37. And then if we wait one more day, does it go back up? If we wait one more day, it actually drops again. And this actually trades below the price that he took profits at. So very interesting. He's basically looking for stocks that break out all-time new highs. He's not afraid to pay expensive implied vols, 150%. And then when he went to sell it on June 8th, that 150% implied vol on that day, it was actually trading what? The implied volatility was 0. So they were basically, although they were quoting $5 premium on the puts, 262%, they weren't quoting anything on the calls. And let's just take a look at that. 42. So the stock is trading at 74 almost, and the 30 call intrinsic is 44, and the last traded price was 41.50. They did 700 contracts. So basically the implied volatility went to 0. The market makers were not willing to pay more for those. Okay, and that's one of the downside is if you buy options that are real expensive and they go deep in the money, if the implied volatility is 0% implied because of, and he could have made a lot more if you just waited another day. But that just goes to show you, you just never know. But it's quite intriguing to follow the actual market conditions when you put the trade on to try to get a sense of, is there something there that we can learn? Take away from this, for me, I'm surprised that he was willing to pay 150% implied vol, but it worked out for him. He bought more as it was going up instead of going down. I was surprised to see that. But he definitely waited for the price to go up significantly. Now, granted, it happened really fast. He really never had a chance to sit back and enjoy a higher option price. It all kind of happened real quick. And he definitely, I'm surprised he didn't stay in a bit longer, if that's the kind of approach you take. But hey, if you hit your profit objective, you take it and you get out. So congrats to him. Another great trade. So that's trade 2 of 5. And this is day 2. So look forward to trade 3 tomorrow, which is another Amazon trade. And you know what's interesting is some of my big option winners, Amazon is up in my list as well. Does that mean that Amazon call options, are they undervalued? The fact that I've made a lot of money with Amazon and Mori has made a lot of money with Amazon, that's a curious thing, right? It's a curious thing that stock has made so many people a lot of money. So we'll look at Amazon for tomorrow. So that's it for today. So good luck.